Welcome back. A couple of these pharma stocks doing well this morning. We have Zydus Life from the broader markets, which has moved to the high point of trade. And alongside that, we have Ipca Labs as well. Both these stocks have made the highs of this morning, gaining about 1 to 2% respectively. But the stock on our radar is Forgings. We are looking at the year ahead. We have with us Vidya Shankar Krishnan, who's the chairman, vice chairman and managing director of the company. Thanks a lot for joining in, sir. Wish you, your team, your family a very happy new year. And as 2020 has passed by, we've had a lot of conversations. Let's talk about the way forward for 2023. Can you spell out, the important things that you'll be watching out for as a company in 2023? What kind of targets do you have? You've given us clearly the targets for FY23 and going forward with regards to your capacity utilization. Can you give us a sense of how raw material prices, oil prices, and European demand is likely to pan out?
Sure. First of all, wish you, Mangalam and Nigel, a very happy, and your team as well, very happy, prosperous and healthy new year. So we hope 2023 will take India to greater heights. Looking forward, 2023 appears to be very strong on the domestic side with an election year ahead of 2023. I'm sure that capital spending in India, infra spending will go up, as a result of which the truck market, which is reasonably chugging ahead, will go ahead even stronger. So from the highs of 2018-19, we are yet to see the truck market go beyond that. So 2023 will be a strong year, is expected to be a strong year for CV segment in India. Raw material prices, as you know, we are largely dependent on steel. And steel today in India is, though with recession looming around the corner or practically there in developed economies, steel has been largely a joker in the pack because of the dependence on coal, particularly from India's point of view, imported coal to make the steel. So coal prices have been pretty volatile and they're subject to a few sources. So coal prices are expected to remain pretty stiff in the ensuing months. So steel is not expected to come down so much in the ensuing months.
Okay, all right. Hi, Mr. Krishnan. Morning. Thanks so much for joining in. Well, FY24 could be the best year actually for CV. Getting into an election year, we'll also have the replacement demand that will kickstart. So CV demand on the whole is looking good. And as per the past monthly data that we have, from the companies, it appears pretty much that CV demand has, as of now at least, not been hurt by the highest interest rates because bulk of the CV sales happen via financing. So good news for you. Before we go ahead, I just want to clear a few points. You had guided for around 1,400 crores, I think, in terms of revenues for this year. Do you maintain that? And also for the next year, I think you were looking in that vicinity of around 1,700 to around 1,800 crores. You're maintaining these this guidance, right? 1,400, 17 to 1,800 with margins in the vicinity of 18 to 19%, correct?
Hi, Nigel. Yeah, let me elaborate a little bit. This year we had looked at 1,350 to 1,400. That looks to be very much on track. Q3 has been reasonably strong, though I don't have the exact numbers yet. And anyway, they are in the non-disclosure period. So you'll hear from us formally shortly in the coming weeks.
Yeah.
The Q4 is expected to be stronger than Q3. So I would say the actuals for FY23 would be very much on target. And FY24, we are looking at about 20 to 25% growth. To put some things in perspective, we have achieved, we'll be nearing about 72 to 75,000 tons of production this year.
Yes.
And in the next year, we expect to do anywhere near 90 to 100,000 tons.
All right.
What we've been consistently saying. Of course, the whole thing is subject to macroeconomic conditions. India looks to be very strong, as we are all well aware.
Okay.
The thing is, the export markets are also not looking as bad. We hear from customers that they're down on inventory and could be looking at strong...
So that's heartening to know that exports aren't looking as bad as you feared it to be, and you maintain the guidance that you have. That's as far as the revenues are concerned. Margin 18-19% stays as well, right?
Yes, that looks to be reasonably on track.
All right. And, just wanted to understand a little about your other parts of the business. You said off-highways will be 5% of your sales as against 1%. Do you have a glide path to that? Do you have a long-term, the date?
I think we've said 5 to 7%, and this year we should be ahead of 7.
Okay, this year you should be ahead of 7%.
Yeah.
Okay, all right. What about... Go ahead, sir. You're making a point?
That's going pretty strong.
Okay, all right. And machining as a part of revenues, I think we're around 50% odd. You have some targets to take that higher, right? Could you tell us, what are those targets as a percentage of your total revenues? Where does it go to?
Yeah. We have looked at about 43%, 45% in the past.
Okay.
And we expect to achieve 60 to 65% machined. See, Najar, what's happened is Forgings has made a big transition from from supplying machined parts in addition to forgings to being a component supplier. And I think as a group, we'll be well on our way to being a product supplier in the next couple of years. And from there on to subsystems as well. So we made a huge transition, and still 2 more steps are on the way.
So machining is the higher margin product?
Mixed bag, but I would say that's the way forward. So like it or not, OEs and customers want only machined forgings. So most of the new orders that are coming in are all just machined. Hardly anything is just as forged.
But does that give you an opportunity to upsell to guys who are not buying machined products?
Yes, it does.
How big is that opportunity?
Huge. And that's where Forgings has made the large transition.
Okay, all right. Mr. Krishnan, valuation-wise, the argument has been that Forgings is cheap, given the kind of capacity, given the kind of revenue outlook that you have. Wouldn't you, have you been ever approached by any large fund or any large party to do a placement, get some money in, retire the small debt of 500-600 crores that you have, and then further grow the business from here on? It's just a query because valuation-wise you have comfort, but yet there is something that's missing, it seems, to excite the stock market. You want to respond to that?
No comments. Largely, the market is very wise, and the market is also large. Probably the liquidity in the stock is not very high. So one reason why there has been a lot of inquiry from, I would say, from large fund houses, no doubt about it.
Yeah.
But the significant factor here is the liquidity in the stock. Whenever we give bonuses, shareholders love it, and they just hold on to the shares in any case. So it's simply not working.
So will you try another bonus, or there's any other, thought process that you have since you're getting inquiries?
I'm out for the now. I'm searching for what will give us better valuations.
Okay, so let's talk about that. Then finally, before we let you go, you have plans to invest about 100 crores in EVs. You wanted to be profitable. Then you have the opportunity with machined tools. You're saying that capex will lead to higher growth going forward, etc. as well. Is there any other new category that you're eyeing right now?
Nothing specific on the EV space. We are looking at not just motors. We're also looking at controllers and at the axle itself. And we are seriously approaching technology partners for both, with both meaning controller and the gearbox or axle side. I'm sure that we will tie up with people in the coming weeks and months, and that should be propelling us to be able to supply a full-fledged, what is called as an e-axle.
Tying up with people in the coming weeks.
And a gearbox.
Tying up with people in the coming weeks and coming months. We will definitely keep our hawk eye on those partnerships out there. I presume they'd be strategic in nature more than financial. Thank you so much for joining in, for speaking through us to 2022, and wish you a happy 2023 once again.
Thank you, and wish you all the same.
Right. With that, we'll sit into a short break, come back. On the other side, we'll get you